In this video, I want to cover 3 stocks that I would consider premium stocks that Warren Buffett and Berkshire Hathaway own as well. If you're an investor looking for some ideas and some top quality businesses, then this video is definitely for you and you want to watch this all the way through. And of course, as a thank you, if you stick around to the end of this video, I'll be sharing with you guys which of these 3 stocks I would personally pick if I had to. So keep in mind that all 3 of these companies are publicly traded companies. You can buy them in the stock market here today. And I believe at their valuations today, they're trading at pretty attractive prices. Now guys, of course, if you enjoy this content, you want me to make more content like this, all I ask is you hit that like button and subscribe if you're brand new to the channel. But either way, remember for this video, Buffett's portfolio is absolutely massive. The man runs a company that has hundreds of billions of dollars. So when you see some of these portfolio sizes, they may seem small on a percentage basis, but trust me, the dollar amount behind them is huge. So let's start off strong here with the best bank probably in the world, JPMorgan Chase, which accounts for 3.43% of Buffett's portfolio. JPMorgan stock is currently down 34% from its highs. However, there's still good reason to own this bank. In good times, the bank is an absolute beast, growing revenue and profits consistently year over year. And even in low interest rate environments like in 2010 to 2015, after the last recession that we went through, the company still pulled in over $100 billion in revenue annually and around $20 billion in profits annually, and they did this pretty consistently. Now fast forward to 2020, we're pretty much in this kind of environment once again, and JPMorgan Chase will most likely see these profits decline from 2019, but similar to 2010 to 2015, it should still maintain very profitable. Many people own banks for their dividends, and JPMorgan Chase yields nearly a 4% dividend here today, with a good history of 9 years of growth, while growing the dividend by 16% year over year. Now the payout ratio is a bit high, and as I stated earlier, income will most likely be lower here in 2020 than in the past, so I would expect JPMorgan Chase to slow down these dividend hikes moving forward. I don't think the dividend is at risk of getting cut at this time, and I personally believe that most of the banks will be able to sustain their dividend going forward here. With JPMorgan Chase, you can arguably own the best bank in the world at a market cap under $300 billion and a PE of 8 and a dividend yield of 4%. And although the PE for this bank and pretty much every other bank will be significantly higher in 2020 and 2021, I still believe that JPMorgan Chase provides some excellent value here if you have a longer term horizon and you want to own quality companies in your portfolio. I can pretty much safely say that this company is a safe haven, if you will, to store your cash in, earn some dividends, and most likely come up on top, maybe not with massive gains, but with some gains over the next few years. The second stock here is American Express, which is a giant in the payment space, and this company makes up 7.8% of Buffett's portfolio. American Express stock is currently down 35.5% from its highs, and its business will take a hit in the short term due to lower global travel. American Express makes most of their money from loans or from their credit card division, and these credit cards are typically geared towards travelers, and as we know right now, that's not really happening too much in the world. Both the loans division and the credit card division of American Express have been impacted directly by the global issue. That being said, the company has been growing nicely in recent years, pulling in nearly $50 billion in revenue and $6.6 billion in profits in 2019. My rough guess is that they will most likely see a hit of 20% or so to their business in 2020, which will result in lower profits and revenue for the foreseeable future. However, I don't think it's unrealistic to see American Express recover quicker than other traditional banks like JPMorgan Chase and get back to pulling in $50 billion in revenue within the next 3 to 5 years or so, regardless of low interest rates or not. Now, like JPMorgan Chase, American Express has a dividend yield of nearly 2% with a healthy growth rate of 10% year over year and 8 years of consecutive growth. However, their payout ratio is much healthier here compared to JP Morgan, sitting under 50%, and even if they take a 20% haircut here in 2020, this should still be fairly sustainable. The company has a market cap currently of $71 billion and a PE of around 13, which is lower than the broader market, but because it has a loan division which carries higher risk, The company does trade at a much lower PE as a result, and its peers Visa and MasterCard, which are much less riskier companies in a similar space here as American Express, trade at a much higher premium. Now, Buffett also owns Visa and MasterCard, so it's not like he believes American Express is the best out of the three. However, when looking at the value today, it's hard to really say that either of the other two companies are providing us a good value. But with American Express, because of that added risk, you are seeing some pretty good value, in my opinion, today on this stock. The third pick we have here is good old Coca-Cola, which is of course the largest pure play beverage maker in the world. This company makes up 9.15% of Buffett's portfolio, so you know he still loves this brand. Coca-Cola stock is down close to 25% off its highs, and honestly guys, you don't see this too often with a blue chip giant like this company. Revenues were on a decline, but recently they have started increasing again, but you don't own Coca-Cola for the growth here, so just remember that. Most investors own this company for stability and dividends, and here you can see in 2019 revenues were $39 billion and profits were around $9 billion or so. So it's still a strong, stable blue chip giant despite recent declines in revenue and profits. Now, like I said, one of the biggest reasons you'd own this company is for dividends, and this company is a dividend king with 57 years of consecutive growth. They also have an impressive 3.6% starting yield and a respectable 5.57% compounded annual growth rate for the dividend. Their payout ratio is a bit high in my opinion and could be concerning in the short term, but the company has gone through worse and come out much stronger before. I have no reason to believe that this time will be any different, and I do believe that Coca-Cola will be around for the long haul. As I mentioned, this company is a giant at nearly $200 billion market cap, and you would think a slow growth company like this would have a PE that's low, but nope. When you look at Coca-Cola here, their PE is 20, and in my opinion, this is a premium stock, so it commands a premium valuation, and as a result, a lot more investors really flock into the stock, especially during times of uncertainty, and that's why it trades at a higher PE than, say, a lower quality company. Coca-Cola is one of the most stable companies you can probably own in your portfolio if you are looking, say, 10, 20 years out and you just want a consistent stream of dividend income. Almost every dividend growth investor has some exposure to the space with either Coca-Cola or with Pepsi, and in my opinion, I think Pepsi is the better play here. But at current prices, guys, with it being 25% off its highs, it's hard to really argue that Coca-Cola is not showing us some sort of value here today. Now, if you want a more in-depth video on American Express, for example, I did cover that in my May Stocks 2020 video, so check that out after this video. And I also covered JPMorgan Chase recently, I believe in the April 2020 video, so check that out as well. But I haven't spent the time on the channel to really go in depth with Coca-Cola, and at current prices it may actually be worth doing that. If you guys want to see that, let me know in the comment section down below. Now guys, I promised you that I'll let you know out of these three stocks which one I would personally be buying at these current prices. And if I really had to pick between JPMorgan Chase, American Express, and Coca-Cola at today's prices and today's valuations, I would go with JPMorgan Chase. Now, all three of these companies are attractive to me. They all have some pretty good reasons as to why you may want to own them. But I think for me, JPMorgan Chase at these prices is something you don't see very often. And I do believe that interest rates, yes, may be low for the foreseeable future, but eventually will start picking up once again. And at that point, the profits will just start rolling in for this company. Now, in the meantime, until that happens, I still think they're going to continue growing. I still think they're going to continue bringing in profits and cash every quarter. So it's not really too much of a concern here for me. And I don't really believe this company is going to go bankrupt or anything crazy like that. I don't think any of these three will. But if I had to pick one of the three, it would be JPMorgan Chase. Another big reason really would be when I look at the banking sector, I think this is the best company in that space. But when I look at the credit card sector, I can't say that American Express is the best. I would say Visa would be the best in there. And if I look at the beverage sector, like I told you guys, Pepsi would be my pick in there because I believe it's a better run company and more diversified company compared to Coca-Cola. So I mean, I like to focus on best of breed, best in their industry. And JPMorgan Chase is the only one out of the three that really gives me that opportunity here. So there you have it. Those other stocks that I believe out of Warren Buffett's whole portfolio are currently on sale, which I would still consider premium companies. Guys, let me know if you agree or disagree with me in the comment section down below. Don't forget to drop a like as well. And if you're brand new here, hit that subscribe button so you don't miss any more content just like this. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.